What's up guys, hope everyone is doing well. In this video I'm going to be going over the indicator known as the average sentiment oscillator, or ASO for short. I'm going to be using Bitcoin as we see here currently, then I'm going to move into Ethereum, Cardano, and then go over a handful of altcoins, some being popular, then some being a little bit more obscure, but for the most part they're all relatively well known at the end of the day. Now, the main topic of this video being the average sentiment oscillator, I want to give a brief description of what it is, what it represents, before I get into going over the pattern that you see going across the board from Bitcoin, Ethereum, Cardano, even into all of these altcoins that I'll be going over. But the ASO combines the sentiment extracted from individual candles to form an average sentiment score over a defined time period or number of candles, which is then plotted in the form of an oscillator, as you can see down here at the bottom. And what you will see here is, looking here at Bitcoin first, we go all the way back to June of 2011 when Bitcoin was peaking out, ending its first cycle at around approximately $30. Looking down here at the ASO, you can see that there was a bearish cross around the end of August of 2011, just a little bit, as you can see here, leading into the bear market of phase 1 for cycle 2 of Bitcoin, after coming down from around $30 to around anywhere from around 11, wicking all the way down to around $6 during that rough time period of around August 2011. But we see this first bearish cross here, where we see the bearish sentiment line. So this black line, which here is going upwards, with the bullish sentiment line being the white line, which is then going downwards here. In each of these pink little circles, so here, 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 going so on and so forth on this chart and all the other charts, are going to represent the bearish crosses and are also representing the origin cross, or what will be 0. And so starting from here, we have 0, and then counting forward, we see 1 cross, then we see 2, then we see 3. Now, before I get into this third cross and the subsequent ones, as I said, this first cross would have been here during around January 2012. Now, when it comes to this first cross, it's not as necessarily reliable as some of the other crosses, such as the 3rd, the 5th, the 7th, the 9th. But every now and then, the first cross is a good cross to act as a buy indicator. It ultimately would have been a good one, and I could technically have it labeled here for January 2012 for Bitcoin. If you had bought in here, you would have been buying somewhere around $6 to $7, maybe $5 during January of 2012, and afterwards it would have gone down anywhere from around that $6 or $7 all the way down to roughly $4, so dropping approximately 50% in value, and that wouldn't have particularly been fun to watch. But ultimately, had you waited long enough, you would have then seen fantastic profit, because it then went from that time in January, early 2012, from roughly $5 to $7 all the way up to approximately $1,200 by the end of 2013. So in summary, again, the first cross isn't as reliable as some of these other crosses that I'll be pointing out in this video, but every now and then for some coins it is a good cross, and ultimately here for Bitcoin it would have been a good one as well. But anyways, so we had 1, 2, then 3 here. The third cross happened in May of 2012. This would have been when Bitcoin was roughly $5, right before this first impulse here, leading into this bull market structure right here for Bitcoin. This would have been the bull market for phase 1 of Bitcoin during cycle 1. Like I said, going all the way at its low from approximately $2 all the way up to $1,200. This is actually commonly referred to as the super cycle, this bull market here. So having this third cross here, then we go 4, then we go 5. So at the 5th cross, and if you haven't already noticed by now or picked up on it, each of these crosses are odd numbers, or in other words, they're prime numbers outside of 1, which, as I said, a lot of times 1's not necessarily the best cross to buy. Every now and then it is a good one to buy, especially in phase 1 of Bitcoin, for example. But for the most part, every single one of these outside of 1, they're all odd numbers or prime numbers, so I'll be from here on out referring to each of these crosses as prime crosses, although I still will be counting upwards from 3, 5, 7, so on and so forth. So here during the 5th cross, the 5th prime cross of Bitcoin, mid-August 2013, had you have bought in here, you would have been buying in ultimately, as you can see here during this bull market structure, towards the end, roughly, approximately, let's just say approximately 80% into this bull market, you would have been buying somewhere around approximately $110 And you would have, like I said, been buying in towards the end of this bull market, but you still would have caught the move from around $110 all the way up to $1,200. Still ultimately a good move. Obviously assuming you would have had the idea to get out once it hit $1,200. So this then, as I have been saying this right here, culminates phase one of cycle two for Bitcoin. Then we begin at that peak of phase one at around $1,200. That then goes down back to the ASO late February 2014. Again, very similar to the origin cross back here in August of 2011. It's just shortly after the bear market has really begun. And what we see here again is the zero. So we have one, and in this case for phase two of Bitcoin, this would have not been a good one cross to have bought, because you would have been buying basically roughly at the beginning of the bear market, a little bit into the bear market, but you would have been buying around $600, which then have continued to go down all the way to around $150 to $200. Ultimately, in the long term, it would have been a good buy-in, because especially if you bought a lot of Bitcoin when it was roughly around $500, $600. Obviously now, speaking about it roughly 10, 11 years later, when it's over $100,000 now, this, who cares if you would have bought in and it dropped all the way from $500 to $600 all the way down to around $150 to $200, you would be in fantastic profit by now. But going back to the current time when this happened, wouldn't have particularly been the best idea. So we had that one, we have two here, then we go to three, and late June, basically the beginning of July of 2015, this would have been the third cross, the third prime cross. This would have been a fantastic buy-in. You would have been buying when Bitcoin was towards the end of this sideways accumulation range for the bear market range low of phase two. So this accumulation range was at the wick lows around 170, all the way up to $300 would have characterized this accumulation range for this phase two bear market low. Had you bought the third cross precisely, you would have bought in somewhere around $280. It would have then had a move downwards from around $280 to $300 all the way back down for one last final wick low down to 170. So yes, in the short term there was a drop after this third cross, but ultimately, which is what's more important here, is the fact that after this, just this is being the weekly chart. Had you just waited, roughly 2-3 months and longer, you would have been in good profit, especially if you rode this entire bull market all the way up to the approximately $18,000, $19,000, $20,000 all-time high in late 2017 in December, beginning of 2018, which culminated phase two of cycle two for Bitcoin. So again, we see the third cross at the end of the accumulation period for the phase two bear market range low of 2015, going back down to the ASO. Then we see heading into the fourth cross, then we see the fifth cross here, late October 2015. This would have been an even better buy than the third cross, because had you bought it precisely, you would have been still buying around $250 to $300, and you wouldn't have had to wait out that small, roughly month long or so downside, and perhaps be a little bit scared. Maybe you didn't make a good decision. Maybe this entire accumulation range back here for Bitcoin in 2015 would have ultimately ended up just going way further down. Well, obviously it didn't, but going back in time when you didn't have all this future data here on the chart, that would have been definitely a concern to factor in. And to go back to this third cross here, you can see that there's a bullish divergence, and bullish, bearish, hidden bullish, and hidden bearish divergences are aspects that can be abstracted from the data printed here on the ASO. And if you look down here, or up here rather, on the chart at the price of Bitcoin in this accumulation range, as I said, it was basically perfectly sideways between around 170 to $300. And during this entire time on the ASO, the bullish line was building up for the entire time. So that would have been a nice bullish divergence, or rather an exaggerated bullish divergence to factor into, especially if you were seeing the trends. Here are these prime crosses on the ASO. You would have anticipated this third cross, and instead of buying somewhere around that $280 to $300, you would have perhaps been very, very lucky and precise to catch these wick lows down to 170, and then carried this entire bull market all the way up to around approximately $20,000. So as I said, we had the fifth cross here, late October 2015. Then we go forward, we see 6, and then we see 7. We're seeing our 7th prime ASO cross here, mid-October 2016. Bitcoin is priced at around $600, just a tad bit below, well, basically halfway below half the value of the prior all-time high back here in late 2013 of around $1,200. This again would have been a fantastic buy-in because you would have then rode $600 all the way up to around $18,000, $19,000, $20,000 at the end of 2017, and this would have actually been a buy-in that would have bought the bottom of the parabolic impulse that characterizes the latter portion of every single Bitcoin bull market after it has the initial build-up period. For example, in phase 2 here, it would have been this portion of price right here from around roughly $200 all the way up to around $800. For phase 1 of cycle 2 back here, it would have been this portion where it saw a build up from around $2 to around $16, $17, and then from this point here onward, November 2012 to December 2013, it was just straight parabolic from there, obviously with this intermediate healthy correction before ending that phase 1. So if we then go to the picking up at the end of phase 2, cycle 2 for Bitcoin, end of 2017, then heading into beginning of 2018, that then leads here down and back at the ASO, February of 2018. Again, just a tad bit into the bear market. This initiates the bear market, so we have our 0 cross here. Let's then fast forward here to 1, March of 2019. So very much so like the first cross of phase 1 back here in January of 2012, this would have been a good first cross to buy. Had you bought here, you would have bought just shortly after Bitcoin bottomed out somewhere around $3,200 during December 2018 into February 2019. Had you bought the cross precisely, you would have been buying somewhere around approximately $3,900 to $4,000. You then would have been able to catch the run all the way up to around $13,000, $14,000, and around June, July 2019. Could have sold there, and then picked it back up. If we go back down to the ASO, you saw the second cross here, then we see the third cross here. This isn't necessarily the best third cross you can see on a lot of these charts I'll be going over, as you did, had you had bought this back in around February of 2020, you would have been buying somewhere around like $8,800 to $9,000 just before the March crash happened. And that obviously, clearly with the amount of data we have on here now and how high Bitcoin is now, it would have been a fantastic buy-in. But back then, without the future data going past March of 2020, it would have been very scary because of how quickly and how much Bitcoin dropped, going from around 10.5K all the way almost back down to the prior bear market low, wicking all the way down to around approximately $4,000. But ultimately, with what occurred afterwards in a relatively short time period, only took around a month after this significant March crash of 2020 to continue to go back up here towards 64K in April 2021. It would have been a good buy-in. But then going back down to the ASO here, so that again was the third cross in February 2020. They have 4, they have 5, the fifth cross being in May of 2020, when Bitcoin has already picked back up after that March crash, sitting somewhere around 8.7K, then moved from there all the way up to, like I said, 64,000 in April 2021. There was also another bullish divergence here with the bullish ASO sentiment line building upwards, where the price was going downwards, leading from the local lows in November 2019 to the second bottom of the double bottom that characterizes the bear market of phase 1 of Bitcoin, which culminated with that very drastic and quick move towards the downside for the March crash of 2020. So you would have anticipated ultimately that fifth cross, knowing that you see this bullish divergence and it's leading into that fifth cross, would have been a very good opportunity to buy that March crash, especially with the whole general idea of, doing what most people aren't doing, especially because a lot of the people that are trading are, a good portion is retail, a good portion are people that don't really know what they're doing, and obviously it's, the top 1% or the top 10%, maybe pushing 20%, the people that are towards the non-majority are typically the ones that are being more successful, but that's not necessarily a generalization that always applies, but it's somewhat of a good rule of thumb. So picking back up on the price with 64K, structurally speaking, and also utilizing on-chain data, structurally speaking, the all-time high for Bitcoin was 64K in April of 2021. Obviously, leading into October 2021, Bitcoin did go around $5,000 higher towards 69K. But again, as I said, using on-chain data, And structurally speaking, factoring in my phase cycle or epic framework, which is when I have been referring to the phases of Bitcoin, phase 1, phase 2, which creates an entire cycle for Bitcoin. That's what I am referring to. So again, 64K structurally speaking is the all-time high. This was the first leg of phase 1 of cycle 3. Again, that's going to be comparative to phase 1 back here of cycle 2, where you see this W right here. You see this Bitcoin comes down, comes back up, comes back down again, sets this double bottom. Then you have this entire bull market structure here. And this first leg right here, going from around $10 to around $300 would be synonymous to this first leg that went from around 4,000 to 64,000 during the prior bull market leg of the current phase 1 of cycle 3. So to pick back up on ASO, May, basically the beginning of June 2021, this would be the origin cross. So again, we have 1, and 1 here wouldn't have been necessarily a bad buy. Had you bought here, you would have been buying somewhere around like 46K. It then swung up to 69K. So had you sold, that would have been a decent profit, but ultimately wasn't something notable, which is why I don't have it labeled down here. So we have 1, then we have 2, then 3 is January, basically the beginning of February 2023. And this was right at the beginning of the current bull market when Bitcoin was moving up from around 15 to 16K up towards 22, 23K, then ultimately hit around 30K and went sideways for about 8 to 9 months. Now, again, you should have anticipated this third cross because on the ASO, the bullish sentiment line is building upwards, whereas the price was going downwards, moving from around 19.2K all the way down to around 15.3K. So again, you should have anticipated that, especially factoring in the fact that there is historical data in terms of these prime crosses on the ASO going all the way back to 2011. So that shouldn't have particularly been a surprise that there was this bullish divergence leading into a third prime cross, which is in many cases the beginning of bull markets here for Bitcoin and here for a lot of the other coins I'll be going over. So this would be the third cross here again. We have 4, then we have 5, the 5th prime cross, late October 2023, basically the beginning of November 2023. Again, this would have been catching this second move here for Bitcoin during the current bull market from around 25K all the way up to 75K. So you would have already caught the first impulse with the third prime cross on the ASO here, when Bitcoin went from around 15 to 30K and doubled in price. Had you bought the 5th cross from around 25K to 75K when it tripled in price, again, very fantastic buy-in. And then going forward with the 5th there, then we see 6th, then we see the 7th one, which I don't have labeled. The 7th would have occurred somewhere around late July when Bitcoin was basically already hitting its local lows somewhere around 55 to 50K. That still would have been a good buy-in as well, although I don't have it labeled. But if we go fast forward to the 9th cross here, mid-October 2024, you would have been buying this current third impulse that Bitcoin is on, basically roughly the same point that you would have been buying each of these prior impulses here, going back to the first one and the second one. Now, as I said, on this first impulse for Bitcoin, it doubled 15K to 30K. Third impulse, it tripled from 25 to 75K. Now I'm expecting this third current impulse that Bitcoin is on to roughly quadruple. So given the fact that it wicked down to approximately 50K, I'm expecting somewhere approximately 200K to be the all-time high for Bitcoin, following that pattern that seems to be appearing since the beginning of this current bull market. Now, this current bull market leg that we're on is synonymous, structurally speaking, in terms of my phase cycle epic framework, to this second leg that ended this, what is commonly known as a super cycle, culminating in 2013, end of 2013, when it hit around $1,200. Moving into Ethereum here, we can see going all the way back to March of 2018. Again, we'll see something similar to Bitcoin, to where when we see this origin bearish cross, it is shortly after the bear market has already begun. Clearly you can see Ethereum topped out somewhere around $1,500 and then moved all the way down to around approximately $700 by the time this origin bearish cross happened. So again, we have 0, then we have 1. Again, I don't have it labeled. This is a case here we're buying the first cross. Ultimately, especially in the grand scheme and the bigger picture now here that we have for Ethereum, given that this has happened in 2019 and we're now roughly approximately 5 to 6 years later, you would have been buying Ethereum roughly when it was $134, then moved all the way up to around $360 for that intermediate peak of phase 1 which is now, obviously this isn't Bitcoin, but Ethereum, Cardano, the altcoins, especially if you've been in the space for many cycles in a long period of time, should be very, very well aware of the fact that everything just moves in an ebb and flow in a lagging hysteresis, to use a technical term. Everything typically follows Bitcoin. Bitcoin does it first, and then you have Ethereum, and then you have more prominent altcoins, and then it leads into more obscure altcoins, and there's all context of large caps and small caps and meme coins. So the first cross here would have ultimately been good. Also, if you bought right as it happened, you would have still been safe leading into this March crash here, because when this March crash happened, it basically came back down to around that $130 entry point. But you also should have been anticipating this first cross here as well, because there is a rough bullish divergence here on the bullish sentiment line compared to the price going down, with the sentiment line building upwards. So again, we had 1, 2, 3, the third prime bullish cross here happening in February, mid-February 2020. Again, this would be similar to what I was going over for Bitcoin, in that this third cross, with respect to this happening during phase 1 of the cryptocurrency market, happened leading into the local high before the March crash of 2020. You would have had to gone through some fear, perhaps some panic, especially if you were new in the crypto scene, to have bought in an Ethereum somewhere around $170 and watched it move and wick all the way down to around $90. But ultimately, with the future data now that we have, that would have been a fantastic buy-in. You'd be very well in a good profit by this point. So that would be the third cross there. Then we have 4, then we have 5 occurring around mid-May of 2020. This again is going to be comparable to the cross of phase 1 of cycle 3, or its current cycle for Bitcoin. When Bitcoin went from its lows around 4,064K, or Ethereum here went from around $190 at the time of this cross, all the way up to the all-time high of around approximately 4.8, 4.9K. Then fast forwarding, let's go to January of 2022, after Bitcoin has topped out, after Ethereum has topped out here, with the entire market, many of the coins setting that double top that characterized the first leg of the phase 1 of the cryptocurrency market. We see the origin cross here for the most recent bear market of Ethereum in January, mid-January 2022. Again, just shortly after the bear markets actually began. Going forward, we see the first cross here, and then this is a case where the first cross is a really good buy, because had you bought it, you would have been buying roughly mid-September 2022, when Ethereum was in its prime time to be buying, in its accumulation range from around, so say approximately 1,700 down to the bear market low, the absolute low of approximately $900. And even if you had bought this cross precisely, you would have bought somewhere around $1,600. Afterwards, it did then go all the way down to around $1,000. But this is an accumulation period. In accumulation periods, you shouldn't be, at least this is the way I view it, you shouldn't be worrying about trying not to buy the local highs in accumulation periods, because that's what the accumulation periods are. It doesn't matter where the price is. It's an accumulation period. You should be buying as much as you possibly can during the accumulation period, because afterwards Ethereum would then go up to where it is now, roughly retesting its prior all-time highs, now being somewhere approximately $4,000, and you'd be in a good profit. So with that cross being the third cross, we then, actually, my bad, that being the first cross. So then we go to the third cross in January 2023. This would have been buying right at the beginning of the bull market, very similar to the beginning of the current bull market for Ethereum, and roughly a few weeks into that first impulse, this would have been very similar for Ethereum. You would have been, had you bought it precisely, buying somewhere around $1,500. Obviously, it then moved up to around 2,100, went sideways, very similar to Bitcoin, and then again had a second impulse right here for Ethereum, which moved from around 1,500 all the way up to around 4,000. Had a consolidation period again, and then is back up again, retesting those prior local highs, and soon to be, I believe, retesting the prior all-time high of 2021 of around 4.9, basically $5,000. So that would be the third cross. Then we have 4, then we have 5, the fifth prime cross here, mid-November 2023. Again, you would have been buying this beginning of this second impulse. Now we have 5, we have 6, 7 would have been, which I don't have labeled here. And actually, now that I'm looking at it, I don't have the ninth cross labeled right here. So before I get to that, I'm going to put this here. So the seventh cross would have been somewhere around July 2022. Had you bought here, you would have seen some short-term downside from around 3.4K all the way down to 2K. But obviously, had you had confidence and conviction in your buy-in, especially trusting this very long-term historical indication and patterning associated with these prime numbers on the ASO, not just here, obviously for Ethereum, but for Bitcoin, more likely than not, it was going to go back up at some point. So again, the seventh cross was there sometime around June, July 2024. Then we go to the ninth cross, November 2024. Had you bought this precisely, you would have bought somewhere around $3,000, which is obviously going to be in profit now, and I think going to be in quite a substantial profit as we really start to head into alt season, because alt season's here, but it hasn't really begun yet, because most of the altcoins actually, at least out of all the prominent altcoins, I don't think any of them have actually surpassed their all-time highs yet, at least not significantly. There's probably a few out there that I'm unaware of that have already gotten to their all-time highs or gone higher, but most of them haven't. And as I go on here on out, going over these altcoins, you'll see these little text boxes with circulating supply market caps at certain price values. These represent my potential price targets heading into alt season, heading into the end of the entire crypto bull market, Bitcoin, Ethereum, Cardano, so on and so forth. And each of these little turquoise boxes you'll see represent the price range that are given at each of these price targets associated with the market cap. Here for Cardano, we begin February of 2018. Again, this is going to be phase one for Cardano. Very similar, again, just happening shortly after the bear markets began. We then go forward to one. Don't have it labeled, but again, this is a case where buying the first cross wouldn't have been a bad idea. You would have had to wait for some sideways choppiness, a boring kangaroo bear market. Really, I mean, you're buying in the accumulation period. So as I was saying earlier, it doesn't matter if you bought and then it ended up going back down below your buy-in just a little bit. It's accumulation period. You should be buying as much as you possibly can in the accumulation periods, which will then lead into the actual bull markets. So again, we had the first cross, second, third prime cross here, February 2020. Again, this is going to be as it was for Ethereum and Bitcoin. This is just before the March crash, but again, accumulation period. Just wait a number of months, maybe just a few weeks, and eventually it's going to start going back up, especially now that we have more data to know for a fact that that is what happened. So we then go 4, 5, fifth prime cross, May of 2020. Again, just right as the bull market's beginning. A few weeks into the bull market, Cardano then went from, had you bought it precisely, around roughly 5.5 cents all the way up to around $3.16. You should have anticipated this as well because the price was going down. It had a negative slope for the price support here, as you can see, but the bearish sentiment line was building upwards, as you can see, leading into this fifth prime cross in anticipation. Fast forwarding to the beginning of the most recent bear market, November 2021. Again, just a few weeks into the bear market, we have our 0 here, and we have 1. In this case, 1. And I'm just going to go ahead and label it since this is a very good buy-in, which I don't know why I didn't already have it labeled. But we have our first cross here, happening just right after Cardano bottomed out at around 25 cents. Had you bought it precisely, you would have been buying somewhere around 40 cents. Ultimately, again, accumulation zone, great buy-in. Would have gone down some in that accumulation period, but just should have been buying as much as you can. Now, there wasn't necessarily bullish divergence here, but the ASO was going relatively sideways where the price had a strong slope towards the downside. So I would say that there is a rough, exaggerated bullish divergence there that you could have used in anticipation leading into this first cross. We look here at the second cross. Obviously, that's not important. And then we have the third cross here, the third prime cross in November 2013. This is going to be, again, akin to what Ethereum and Bitcoin were experiencing during this time, as I went over in the prior two charts, just shortly after this first impulse here for phase one of the altcoin market, or just not the altcoin market, but the broad cryptocurrency market, when Cardano was going from roughly 25 cents all the way up to around 75 cents. Had you bought it precisely when the cross happened, you would have bought somewhere around 40 cents as it headed into 75 cents, but ultimately you would have wanted to continue to hold that longer because it's still in its accumulation period. So that being the third cross, we have 4, then the fifth prime cross here happening mid-November 2024. You should have anticipated this. The bullish sentiment line is going up. The price is going slightly downwards, basically sideways, so there's an exaggerated bullish divergence there. Should have anticipated it. So you should have been buying ideally somewhere around 33 cents. And then you would have been able to have nicely rode this almost borderline vertical parabolic move from around that 34 cents all the way up to the roughly $1.20 or $1.30 that it's hit recently. We move here into Bitcoin Cash, going all the way back to February 2018. Again, just a few weeks into the bear market. Origin cross here is at 0, going all the way to 1. In April 2019, this would have been a good buy-in, as you would have bought somewhere around $150. Ultimately, Bitcoin Cash just did nothing but go up. There would have been a brief 2 weeks where it wicked below that by around $20. I would say that's a negligible point to make, but nonetheless, wanted to say it. So we have the second cross here, the third cross here. Again, phase 1 of the cryptocurrency market. This would have been leading into the March crash. Not necessarily the best place to buy in, but it's still within an accumulation range. I would consider this portion right here for Bitcoin Cash to be an accumulation zone leading into the actual bull market parabolic period, which would be this portion of price right here. So that's the third cross. 4, 5, fifth prime cross, July 27th, late July 2020. Fantastic buy-in. Would have bought somewhere around $230. You should have been anticipating it as well, because the bullish sentiment was building upwards, whereas the price was relatively stagnant going sideways. So there would have been a subtle, exaggerated bullish divergence there that you could have acted on in anticipation. So we have that being the 1, 2, 3, 4, 5, 6, 7, which I don't have labeled here for some reason. Seventh cross would have been right here around November of 2020, just right before it's going parabolic from around $260 all the way up to $1,700 at the end of the 2021 bull market. Then rinse and repeat. We go back down to the ASO here, June of 2021, a few weeks into the most recent bear market. Then we have one, in this case, like the last case of the first cross going back to April 2019, now being September 2021, this would have not been a good first cross to buy, because Bitcoin Cash was somewhere within the range of $500 to $800. Afterwards, then crashed all the way from that range all the way down to at lowest around $87, 88% drawdown. So that, again, some of these first crosses have been good on the prior charts, but this is really the first instance where it's totally not a good time to buy in for the first cross. So we have a second cross, then we have our third cross. And before I continue to go on here, I want to mention that really, and you'll see this as we go throughout this video, that beginning at the third cross and heading into the fifth cross is really a generalization of the prime time to be acting on these prime bullish crosses of the ASO indicator here. A lot of the times this beginning at the third cross leading into the fifth cross is happening in the accumulation zone, leading into roughly the first impulse of the actual bull market after the accumulation period is ended. But nonetheless, we have late January 2023 here. This cross here begins the third. You would have bought somewhere around $130. It did go down a little bit afterwards, but again, you're buying the accumulation zone. That's all that matters. You should just be doing what it is defined as, accumulating as much as possible, and I can't stress that enough, and I will probably continue to say that more times in this video going on than I should, because you should be able to get it by now. So we have our third cross here, then we have 4, then we have 5, being the fifth prime cross, mid-July 2023. This would have been buying after this massive, almost vertical impulse here at the beginning to really begin the Bitcoin Cash bull market of the current one that it's on, from $92 approximately to around $330. Ultimately, there was a rough bullish divergence starting from around July here, leading into June of 2023. So July of 2022 to June 2023, there's a pretty wonky and wacky looking bullish divergence here. But nonetheless, you could have anticipated that beforehand leading into this fifth prime cross, and you would have been able to buy around $100 and then catch this move all the way up to around roughly $330. So that being the fifth cross, we have 6th, we have 7, late October 2023. You would have bought somewhere around $230 and then be able to ride the wave all the way up to around $730 in April of this year. Then we go forward, that being the 7th cross, we have 8, Then we have a 9 here. Actually, let's see. 1, 2, 3, 4, 5, 6, 7, 8, 9. Now, 9 not being a prime number, most of these with these crosses are prime numbers. Every so often, like I said, 1's not a prime number, but most of these crosses are prime. They're all odd numbers, but most of them are prime numbers. 9 obviously is not a prime number, but nonetheless it is an odd number. So this isn't a prime cross, but it is an odd cross. This happened November 2024 this year. Had you ultimately should have anticipated it because there was a bullish divergence here. Sentiment's building upwards, price was going downwards, but you would have bought somewhere around $300 to around like $400, and you would have been able to ride it up to where it is currently at around $640. As I went over this recently, I'm not too sure it's going to go any higher. It definitely could, but if it does, I don't think it's too likely to go higher. I think at highest it could push like roughly $2,000 again, or just roughly retest the prior all-time high here, somewhere around like $1,300 to like $1,700, maybe wick just a tad bit higher. But according to my phase cycle or epic framework that I superimpose over all altcoins to give some sort of reasoned and logical future projection in terms of the ending of its bull market of an all-time high, I think somewhere around, which it's already hit, somewhere around like approximately $700 to around $1,000 is what's most likely according to how I, and the framework I use to look at the market. Look here at Ethereum Cash going all the way back to here, March 2018. A few weeks into the bear market, we have our origin cross here, then we go forward, then we have one. Again, this is going to be a good one cross to buy because it's corresponds to the phase 1 of the cryptocurrency structure. It's going to be the same as I've explained it for all the other altcoins so far, Bitcoin and the other altcoins. So the first cross, and then we have 2, then we have 3 here. Again, this is going to be akin to the just leading into and before the March crash of 2020. So not necessarily the best buy-in, but ultimately you would have been buying the accumulation zone here for Ethereum Cash, and obviously with the future data we have now, made a massive move all the way up to around $175 from the average of, or the median rather, this accumulation zone being approximately $6 to $7. So that's the third cross. 4, 5 would have been June of 2020. Would have been buying somewhere around $7 had you anticipated it, because actually, to correct myself, there wasn't a bullish divergence here, so you didn't really have much of a reason to anticipate it unless the RSI or some other indicators were showing something to anticipate it, which I will advise to use other indicators in conjunction with ASO and other things in order to gather a more comprehensive picture of what a market or an asset could be doing. But something that I do want to point out, to make a tangent here, is that I think that, in my personal view at least, the ASO might be one of the most powerful indicators because of what I'm going over specifically in this video that I've ever come across, outside of the trader's reality indicator, which is why these colors or these candles here are color coded, as you'll see throughout the video, and these estimated moving average you see on here are associated with that. It has vector candles, which are, I think, very powerful tools for market analysis as well. But outside of the trader's reality indicator and the pi cycle indicator, the ASO might be in that top 3, where I'd probably put it roughly at that 3rd spot. So again, yeah, we had that 5th cross going forward. 6, 7 we see here, January 2021, you would have been buying, and there's actually a hidden bullish divergence here. The price was going upwards, whereas the bear sentiment was going downwards. So you could have anticipated this as well. Had you anticipated it, you would have bought somewhere around $5 and then caught the move all the way up to $175. That would have been a fantastic opportunity. And then we're going to rinse and repeat here. Shortly after the most recent bull market, we're looking here at the origin cross of October 2021. Then we go forward, we have 1. 1 would have been, again, a questionable buy. If you anticipated it, which you could have theoretically, because there was a bullish divergence here in comparison to the price, you would have bought somewhere around like $13 to $15, and you would have bought the bear market low for 2022 to 2023 during Ethereum Cash and its accumulation range here. So ideally, this first cross would have been fantastic had you anticipated it with that bullish divergence. But if you bought the first cross here precisely, you would have been buying this local top here, and then it would have went down. Ultimately, this would have been roughly in the accumulation zone. So as I've been saying, it's really, if you had the plan to long-term hold your position, it would have been a good buy-in. Obviously, where it is right now at around like $34, it's sitting. You would be breaking even had you bought that local top back here in around August of 2022. So it's really only would have been a good buy-in, assuming the fact that it's going to significantly go higher here, which it may or may not. This is better than a Bitcoin Cash because, as you saw here with Bitcoin Cash, it's just in a long-term. It's been a long-term downtrend since 2017, whereas Ethereum Cash here is making subsequent all-time highs. But this could be the bull cycle where we start to see Ethereum Cash not make a new all-time high. That's definitely possible. And it could totally not hit these price projections that I have right here. So we saw that cross here being the 3rd, we go 4, 5, being in November. You would have bought right at the end of the accumulation period. Ultimately, should have anticipated it because there was as you see, the bearish sentiment ASO is building upwards, whereas the price is going sideways. There would have been a subtle, exaggerated bullish divergence there that you could have potentially acted on. You would have bought somewhere from around $15, and you could have caught the move all the way up to around approximately $40 at this point, or held even longer if you think it's going to go higher. So we see that cross, and we'll lead into 6, and then we see 7 here in November 2024. You would have bought recently. Ideally, you would have anticipated it because there's a rough bullish divergence here as well. And there's also a hidden bullish divergence going all the way back to June of 2023 until around August of 2024, where the price was going upwards and the bullish sentiment was going downwards. So you could have acted on that as well to really get the most out of this most recent impulse here for Ethereum Cash. If you look here at Phantom, this is going to be the first coin that I go over that has me, as you look down here at the ASO, you see this first origin cross extrapolating back in the past a little bit. I'll do this for some of these coins because they don't, it doesn't have an initial bearish origin cross where you've seen that for, like, for example, if we go to here to 2022, there is a clear cross here, but looking at the data on the ASO here, you can see that the bearish sentiment had dominance, but it doesn't prior to that show the actual bearish cross. So I'm just extrapolating and assuming that clearly there would have been a bearish cross sometime, maybe roughly late 2018. So assuming this is our 0 here, we go forward, we go 1. 1 would have ultimately been a good buy-in because, again, it would have been in the accumulation period. You would have had to have waited for some sideways action. You would have been in a deficit for a number of months, but ultimately had you held and strong, you would be in good profit by now. So going into the second cross here, then we go to our third cross, June 2020, fantastic buy-in. Would have been buying in right at the beginning of this bull market, somewhere around roughly half a penny, then going all the way up to around $360. We have our fourth cross here, and we have our fifth here. Ultimately, again, would have been a good buy-in, roughly halfway during this second impulse here, from around roughly 2 cents all the way up to almost $1. One thing that I do want to mention here is that on this ASO indicator, you'll see another way to anticipate moves rather than relying on certain divergences. It's very crucial to notice that at some point the bearish sentiment and the bullish sentiment are going to, well, the bearish will set peaks here, and then the bullish will set troughs or lows here, and then it will then lead into a bullish cross. So you want to kind of anticipate a potential, especially if it's leading into a prime cross or an odd cross in the case of like the 9th cross. Then you want to try to catch these lows set here by the bullish sentiment and then watching for it to start coiling back up. You could take a little bit of risk there and anticipate that it is actually going to lead into a prime or odd cross, which it did do in this case, leading into the February, the cross here. So then going forward, we have the 6th, and we have the 7th cross here in September 2021. Again, this instance, you could have anticipated the coiling up of the bullish sentiment, but there also was a hidden bullish divergence here going all the way back to December of 2020, then to July of 2021. The bullish sentiment was going downwards, but the price was going upwards. So you could have anticipated it through that hidden bullish divergence. Obviously, you would have been buying in ideally somewhere around 20 cents and then catching the move all the way up to $3.70. Rinsing and repeating here, January 2022, a number of weeks into the most recent bear market, rather. Then going forward, we have our first cross here. Very good buy-in. You would have been ultimately just buying in within the accumulation period. Then we have our second, we have our third prime cross here, November 2023. You would have been buying the first impulse here of the current bull market structure for the cryptocurrency space. Again, this would be a comparative to Bitcoin's first impulse from approximately 15K to 30K and so on and so forth, as I've been explaining it so far. We're going to start to ease off, pointing out the price targets and when it moved from a low to a high as I get further on in this video, just because it's not necessarily necessary. So again, we have our first, second, third, fourth, and then fifth here being in October 2024. And there wasn't particularly any divergence to anticipate here, but again, leaning on when you start to see these coiling up here for the bullish sentiment could therefore be anticipating it, especially before an odd or a prime cross. And right now, Phantom's been doing very well, having already broken its descending resistance here, and could be one of the better movers as it was the last time around, at least for the prominent altcoins. Obviously, certain meme coins and whatnot make asinine and absurd gains, but when it comes to the actual prominent coins that have genuine use cases in terms of their projects and their protocol, Phantom, I believe, is one of the better ones out there, because it did do around like 220% in the prior bull market. Moving in here to Solana, I've covered it many months ago, but I haven't covered it recently, and I was just looking back at it again, and for whatever reason I forgot that it did a little over 100% during the last bull market. So just to quickly go over it, circulating supply approximately 480 million. The market cap at the lower bound price projection. Again, this is me superimposing my phase cycle or epic framework here onto the altcoins, utilizing Bitcoin as the prime mover. So somewhere approximately $3,000 would give it a $1.48 trillion market capitalization. At the upper bound, which I don't, this has me, I have to take it from this really random wick all the way down here to 20 cents all the way to the peak in September, which gives it around 110% move and potentiality. But because it does bring, if it were to move this high to around 8.7K, it does give it a $4.19 trillion market capitalization. And given that that would be, depending upon where Ethereum and Bitcoin goes, would be higher than both of those. I'm not sure how likely that is. There's definitely some sort of probability associated with it, although I would give it something lower than maybe 10 to 15%, and that 10 to 15% might be generous. So I would expect anything more, assuming obviously that this ends up playing out somewhat accurate. Well, obviously I have no idea what's going to happen, and I don't have a crystal ball for the crypto market, but I think $3,000 to $4,000 is pretty reasonable, and anything obviously leading up to that. So maybe like $500, $1,000, $2,000, $2,500, anything leading up to $3,000 to $4,000 is, I think, quite reasonable. Anything under $1 trillion, I think, is quite reasonable, especially for something like Solana. But to get to the ASO, again, we see here in January 2022, the beginning of the most recent bear market, just a few weeks into it, we have a zero cross here. We get our first cross here during February 2023. You would have been buying during the accumulation period. Ultimately, again, great buy-in. So we have 1, 2, 3 here. You would have then still been buying in the accumulation period. August of 2023, towards the end of it. Great buy-in again. 4, 5, fifth prime cross here. October 2023, you would have been buying right at the beginning of this first impulse here for Solana, somewhere around $19 all the way up to around $200. Then we go forward again from 6 to 7 here, being in October 2024, you would have been buying the recent and current impulse right here that Solana has been on. And again, could not go any higher. Maybe Solana is one of those coins that is destined to die out, because it's happened to many altcoins over the last approximately 15 years, and they just stop having macro uptrends. They stop making subsequent all-time highs, and they either just completely die out or they just enter macro downtrends for the rest of their existence, which typically ends up culminating in it just dying off, and basically there's no more interest in it anymore. If you look here at LCX, going to January 2022, again, a few weeks into the most recent bear market. So we have 0, then we have 1. 1 would have been a good buy-in. Should have anticipated it because there was a bullish divergence here with the ASO building upwards, the price is going downwards. So you would have been able to buy in somewhere around 3 cents, right at the very bottom if you were good enough at timing it. So that would have been a good buy-in for 1. We have 2, then we have 3 here in December of 2023. You would have been buying here if we characterize LCX here, making this double bottom, which is then leading into this current bull market. However high it ends up going, who knows? But ultimately, you would have been buying shortly after this, again, like I said, November 2023, leading into this first impulse to the bull market here. Should have anticipated it as well because there was a bullish divergence here on the ASO, building upwards, and the price appeared going downwards. We have our 3rd, 4th, and then we have our 5th crossed most recently, December. From then, you should have anticipated it because the ASO was building upwards and the price was going downwards. You could have bought a move from around 9 cents all the way up to 40 cents. Would have been a very good move to catch, and it could potentially go higher. As I said last time in my video, $5.25 to $10 is what I have been projecting using my phase cycle framework and its superimposition. But from what I've read, apparently this is a pretty credible coin, and it could definitely potentially go far higher, given the fact that at $10 it would only be worth 7.72 billion, and that's a quite small market capitalization. So it definitely, hypothetically, has a lot more room towards the upside, given how small that is at $10. And I believe that I did actually add something here, somewhere around $20 to $40, around $43 as well. Because when I went over it last time, given my phase cycle framework and its way I superimpose it, I only took the move from March of 2020 all the way to September of 2021, because that's the time frame that characterizes the bull market of phase 1 for the Bitcoin predominantly, but for the, obviously, as that translates to all the altcoins and the rest of the cryptocurrency space. Taking it all the way from the beginning of its price to, again, September, then would give that $20 to around $40 price target. If you look here at MATIC, again, this is going to be one of the ones that I extrapolated back in the past. So let's just assume clearly there was a bearish dominance here at around like August, September, October 2019. So we're assuming there was a cross here. That then leads into 1 here in November 2019. I don't have it labeled, but ultimately it would have been a good buy-in because you would have been buying during this sideways accumulation period. That then led into 2, 3, again being within the accumulation period in February of 2020. Then we have 4, 5 here being still within the accumulation period in May of 2020. Then we have 6, then we have 7, which is literally right at the beginning, January 2021, of the parabolic phase of MATIC's prior bull market, where you could have ideally caught a move if you had bought the really close to the absolute lows, somewhere around just shy of a penny, and you would have caught a move all the way up to approximately $2.85. So again, we're going to be rinsing and repeating, looking here all the way down at February 2022, just a number of weeks into the most recent bear market. We then have 1 again, in this case, would have been a good buy-in because you ultimately would have been buying during this very long-term accumulation period here for MATIC, as it hasn't broken its descending resistance here, something I've spoken about recently, and it actually was going down from around, let's just say roughly June, July, August, up until around beginning of November of this year. MATIC was going down where a lot of altcoins were making good gains. Recently, it's found a very crucial bounce that I said it needed to find. So that's good to see. But ultimately, with this third cross here, you would have been buying during the accumulation period. We have 4, 5, again, accumulation period buy-in in November of 2023 when it's worth somewhere around 80 cents. 4, 5 recently being with the current move upwards that I was just speaking about. You should have anticipated this because there was a bullish divergence here. Price was going down. The ASO was building upwards. There's also a bullish divergence here leading into the 5th cross as well. So you should have anticipated that to get an ideal buy-in as well. Now, just to quickly point it out, MATIC still does need to break approximately 85, 86. Let's just round it up to 90 cents, especially because the prior local high horizontal resistance is somewhere around $1.20 to $1.30. Those are some price targets toward the upside to look out for, and that are going to be important for MATIC breaking in order to actually set a good and reasonable precedence to lead into an actual full throttle parabolic bull market, which I think is more likely than not, given the credibility of this coin and how well it moved last time around. But again, at the end of the day, who knows what's going to happen? I don't have a crystal ball. So look here at theta again. So we're going to extrapolate back in the past here a little bit. The bearish dominance here was set. So we have 0, we have 1. Ultimately, in the bigger picture, 1 would have been a good buy-in because you would have been buying during this sideways accumulation period. Had you bought it precisely, you would have bought somewhere around 21 cents, maybe even 30 cents at the wick high. And it would have gone down from around 30 cents here all the way down to roughly 5 cents. So that wouldn't have been the best thing to have to sit through. But ultimately, like I said, you would have been buying during the accumulation period, and theta then ended up moving from, let's just round it to approximately 5 cents, all the way up to $17 almost. That would have been a very good opportunity. So we had 1, 2, 3 here in February 2019. Again, you're buying during an accumulation period in the bigger picture. Fantastic buy-in, at least in my view. Then we have 4, or not 4 and 5, but 5 and 7 are going to be right here in this cluster from around May to July of 2019. Again, you're still buying in the accumulation period, so same sentiment here. Would have then caught a fantastic impulse had you stayed in it long enough. We have 8, we have 9 here, January of 2020, leading into the March crash. Again, it wouldn't have been pretty to sit there and watch, but ultimately, had you had conviction in what you bought and you had confidence, you would have then caught a very nice move up to approximately $17, as I said. Then we have 11 here, somewhere around May of 2020. Ultimately, you should have anticipated this because there was a bullish divergence here with the sentiment building upwards and the price building downwards. And you would have really ideally caught this entire run had you timed it just right. Again, we're going to rinse and repeat here going to June of 2021. Just a few weeks again into the bear market, 0 here. And then we go all the way to the first cross here in February of 2023 again. You would have been buying during this descending accumulation range here for theta. Still would have, had you bought in it precisely, would have had some room to go down. But again, accumulation period, that's what it's for. Just buy as much as you can. And there's also a bullish divergence you could have anticipated leading into this first cross as well. So you could have bought the low here and it didn't go too much. I mean, if you had bought in somewhere around 72 cents, it just went down to around 60 cents. So that's not too much of a lower drawdown, or maybe, approximately 12 cents. It's not that big of a deal, at least in my personal view. So we have 1, 2, 3 here in November 2023. You would have been catching the first impulse here for theta. Should have anticipated it here. The price was going downwards, basically sideways, where the bullish sentiment was building upwards. So you would have been really ideally catching this entire run from around 60 cents up to around $3.15. So again, we have 3, 4, 5. With the recent cross here, you should have anticipated as well. The ASO is building upwards, whereas the price is going sideways. Exaggerated bullish divergence. So you should have caught an ideal buy-in anywhere from around $1 up to the current local high around $3.30. Here for ANKR. So we're going to again extrapolate back into the past here. Assume a cross because the bearish had dominance here. That then leads into the first cross here in May of 2020. You should have anticipated it. This is after the March crash of 2020, so that's nice. You should have anticipated this because there was a bullish divergence. You would have then caught a move somewhere from around roughly 1/10 of a penny all the way up to 22 cents approximately. Fantastic move. So 1, 2, 3. 3 would have been buying in December 2020, roughly halfway into the bull market here for theta. You would have been buying somewhere around approximately just a little bit below a penny, roughly like 4/5 of a penny, to catch the final leg here of this most recent bull market for theta. So then here, fast forwarding to January of 2022, again rinsing and repeating the current or the most recent bear market for theta. A number of weeks into it, so we have 0, we have 1. 1 would have been a good buy-in here. You would have been buying during the accumulation period. Ideally, you would have anticipated it here because there was an ascending support here. The ASO bullish line was building up, the price was going downwards. So had you anticipated that, bought it just enough, you would have bought the wick low of the bear market recently for ANKR. So that's 1, 2, 3. We have 3 in November of 2023. Also, if you haven't picked up on it by now, a lot of these crosses are happening at the same time, which is a further testament to the fact that Bitcoin is the prime mover. Bitcoin moves, then Ethereum moves, then you could say Cardano, and then you have like large caps, and I don't know, I'll probably overlay it now or when I was talking about this earlier, but that chart that goes around quite often talking about Bitcoin moves first, and then money flows into like Ethereum, and then you have like large caps, and then like small caps, and then eventually meme coins at some point. Now that's not a foolproof model. There are some outliers that don't really fit that generalization, but it's nonetheless a pretty good general rule of thumb to go by. So we have the third cross here, again, November, so you would have been buying the end of the accumulation period here. Ideally, you would have anticipated it because there's another bullish divergence here. So you would have bought ideally anywhere from around roughly 2 pennies and caught the move up to around 7 cents. So that being the third cross, we have 4, 5 here recently. Again, you should have anticipated it because the price was going slightly downside, slightly towards the downside, basically sideways, but the ASO was just going, you know, about 45-degree angle upwards. So that would have been a bullish, or exaggerated rather, an exaggerated bullish divergence that you should have anticipated. Yeah, I suppose if you were risky enough to trust the process here with these prime or odd bullish crosses, but you would have bought anywhere from around 2 cents up to where it is now. Finally, just a tad bit, not too much. It's broken its descending resistance here, but like I said, not too much, and it's currently below it. And a lot of these altcoins, to make a tangent here, a lot of these altcoins are fizzling out a bit, and they're going sideways, and they're retracing a bit. They're just having healthy corrections, especially the ones that are actually going to be having parabolic full throttle bull markets as alt season really sets in over the next, you know, month, 2, 3 or so. Because I think, roughly speaking, I think there's maybe about 4 to 9, maybe 10 months left of the bull market for Bitcoin and everything else. Generally, I think this current crypto bull market will end sometime next year. I think Bitcoin will top out currently with the way the data looks sometime first half of next year, and then we'll start to see a lot of the altcoins top out very shortly, you know, maybe 4 to 6 weeks or more after Bitcoin, but I don't think no later than roughly November, December of next year is when we'll start to see many of the altcoins wrap up their bull markets. And I'll actually, at the end of this video, go over into the Bitcoin dominance to briefly kind of talk about that to provide some sort of a general sentiment outside of the just absolutely intriguing and I think eye-opening indications that the average sentiment oscillator gives, being the main topic of this video. But here for XYO, we begin here at the bearish cross of 2019 of January. We have again 0, so we have 1 in this case would have been a fantastic buy, and you should have anticipated it because there was a bullish divergence here with the bullish ASO building upwards and the price going drastically downwards. So you would have really ideally bought the low here for XYO, which was roughly just about right at 1/10 of a penny. So again, 1, we have 2 down here on the ASO, then we have third cross would have been buying, and you should have anticipated it because there was a, let's see here, there was a rough hidden bullish divergence you could have seen here with the price. If you look down here, the ASO around August of 2019, the price was here as I'm pointing to, then fast forwarding to the ASO around December 2020, the price was here. So connecting this with a trend line would have been a descending slope, whereas the ASO here would have been an ascending slope. So that's a rough bullish divergence you could have potentially acted on. But ultimately, this coincided with the breaking of this descending resistance as XYO then went borderline vertical afterwards. Corrected here a little bit and then went higher, but very good buy-in nonetheless. Would have been buying somewhere around roughly approximately 1/3 to half of a penny had you caught that a little bit late and not anticipated it. So that was third, then there's a fourth, and then there's a fifth cross here that you can't see. I'd have to zoom into it very, very closely, but July of 2021, you would have bought this somewhere towards the end of this consolidation here, leading into this last impulse or leg of the XYO bull market as it went from around half a penny all the way up to approximately 8 cents. Again, we're going to rinse and repeat here, January 2022. Number of leaks into the bear market of most recent. We go forward, we have 1. Don't have it labeled, but because it is a good buy-in looking at it now, I'm going to label this. We have 1 here. You would have been buying during the accumulation period. Yeah, if you would have bought precisely when it happened, you would have been in a deficit for, roughly from February all the way to October 2023. So a multi-month deficit. But again, had you realized that this is the accumulation period, had you had conviction in your buy-in, and just generally had you trusted XYO as I think, a credible protocol and project, you shouldn't have particularly been concerned about your buy-in. But going forward, again, we have 1, 2, 3, third cross here happening in November of 2023, right at the, let's see, the W here for looking at this as a double bottom here, but more accurately, this would have been the first bottom here, and then this will be the W, because this is what it did the last time around, as I've pointed out in videos that I've dedicated to XYO recently. But that would have been a great buy-in. November 2023, again, lining up with the first impulse of the cryptocurrency market. You would have been buying in right at, had you anticipated it, because you should have, because there's a bullish divergence here of the ASO to the price, you would have bought the low somewhere around approximately 1/3 of a penny, and had then rode the wave all the way up to roughly 4.5 cents with the most recent local high. And then we have 4, 5 with the 5th prime cross here in November 2024. You would have then bought just before this most recent impulse and caught a very good move as well. Here for XRP, we go all the way to the beginning of the 2018 bear market, March of 2018, again a number of weeks into this bear market. Then we go to the first cross. In this instance for XRP, the first cross is not the good one to have bought, as you would have bought somewhere around 50 cents approximately. It then went down for another, let's see, all 2019 into the beginning of 2020. So a little over a year, about a year and 3-4 months or so. It would have been going down for that entire period from around 50 cents all the way down to 10 cents. So that wouldn't have been fun to buy. Obviously, if you just held through and stayed strong, you would have been eventually in good profit at some point. But again, 1's not a good buy here. We have 2, then we have 3, and then even 3 for XRP, because XRP, because it was in a multi-year legal battle with the SEC, its price was just suppressed for many reasons. A lot of people probably just didn't want to buy it because they didn't know what the outcome was going to be for the SEC lawsuit. I mean, it could have went badly. Fortunately, it didn't go badly, and they ended up winning. But it could have went badly. So, I mean, the third cross, even here for XRP, was not good. Which, as I've said, the 3rd to 5th cross is typically the prime time to be buying during the accumulation periods as they lead into the actual bull markets here for these cryptocurrencies. So we have 4, then we have 5, 5 being the first cross that you really wanted to have bought, because this would have been buying about a week or so into the March crash of 2020 during phase 1 of the cryptocurrency cyclical structure. It would have been down by a decent, amount. I think it would have been, had you bought precisely at it, it would have been down roughly 60%, but that would have been a short-lived deficit you would have been in. So, I mean, I would say ultimately it's not a big deal. You would have been buying the end of the bear market, and you would have been able to catch a move, depending upon where you bought in at, all the way up to approximately $2. So that being the 5th, you have 6, you have 7, 8, and 9. Or 7 and 9 are going to be anywhere from around May to July of 2020. That would have been buying after the March crash. You would have been buying after the bear market's over, and then leading into, again, like this bull market here, all the way up to $2. Again, we're going to rinse and repeat. December of 2021, a number of weeks after the bear market has began. Really, all of these origin crosses are happening after the distribution period, which I haven't gone over that for the other coins, but here on XRP, for example, the distribution period would have been roughly right here, and then after roughly December 2021 is really when this full throttle bear market set in, when it went from around $1.30 all the way down to around 30 cents, and genuine substantial volume towards the downside of bearish volume that started to really set in. But anyway, so we have our 0 here, so the origin cross. We have then 1 wouldn't have been a good buy-in in this case. 2, 3 would have been a good buy-in because you would have been buying the accumulation period right here, anywhere from around 32 cents all the way up to around 50 cents. You have 4, then you have 5. 5 would have been a good buy-in somewhere around March of 2023 at around 40 cents. You should have anticipated it because there was an exaggerated, a subtle bearish, or not bearish, but a bullish divergence here from around July 2022 to January 2023, where the price was going sideways and the ASO, the bullish sentiment, was building upwards. So you would have caught the end of the accumulation period. Obviously, after this, I mean, really, you could say this entire portion here for XYO was an accumulation period because it wasn't doing anything substantial until relatively recently. At the beginning of November, it shot up almost borderline, basically almost vertical from 50 cents up to almost $3. But anyways, so you had so 1, 2, 3, 4, 5, you had 6, then you had 7 here in November, you have 9 here in April, you have 11 here in August, and then you had 13 here in November. All of these, again, just would have been in this, relative sideways area where you would have been buying anywhere from around like 40 to around like 70 cents, and then catching this crazy move that it has seen recently. Now, I went over XRP in a dedicated video recently, showing how on December 7th of 2020 here, it led to an 80% pullback after a borderline vertical impulse in price during the early stage of the bull market back then. And we saw something down to the T, almost exactly the same recently, where we're seeing the first borderline vertical parabolic impulse from, like I said, 50 to almost $3, 50 cents to almost $3. And it just so happened to locally top out on December 7th of 2024, 4 years later. Now, 4 years in general is a cyclical rule of thumb. I mean, Bitcoin typically, even the halvings are happening every approximately 4 years. That number, the 4-year period of time, seems to be very important for Bitcoin, and because it's important for Bitcoin as the prime mover, becomes very important and a general rule of thumb for many of the altcoins. So, will we see something similar? I'm going to go over this in another dedicated video soon over the next, week or so. I'm going to try to get it out sooner than later, but it's currently still looking relatively similar, zooming in on lower time frames, to the way it looked in December 7th of 2020. If you look here at JASMY, again, extrapolated back in the past year, we saw there was some bearish dominance here, so we're going to assume this would be the 0, 1. 1 would not have been a good cross to buy for JASMY, so 2, 3. 3 would have been a great cross. This would have begun, so looking here at this is a W bottom, a double bottom here for JASMY. Now it's moving up, and I think it's more likely they're not going to go higher. How high it's going to go, I don't know, because there's very little data, so I don't have the ability to superimpose the phase cycle or the epic framework of Bitcoin onto this altcoin. As I've spoken about a little bit more in depth in past videos when I've gone over this, but the third cross would have been very good to buy had you anticipated it, because there was a bullish divergence. The ASO bullishly here was building upwards and the price was going downwards, so you would have really bought the first bottom of this double bottom here leading into this third cross in around February 2023, 4, 5, the fifth prime cross here in November 2023. Again, this would have been right after the double bottom. Here, again, there was a bullish divergence. The ASO was building upwards and the price was going downwards. This would have been, again, coinciding with Bitcoin and every other altcoin that I've gone over, with the first impulse of the broad cryptocurrency bull market and that we've been seeing here since the end of 2022, beginning of 2023. Then we go forward, 4, 5 recently. Again, there actually was a hidden bullish divergence you could have used to anticipate this fifth, or this cross here, rather, this not being the fifth, but the seventh one, from going all the way to July of 2023 to now. The ASO was it was basically flat, but the price was building up, so you could have seen that as an exaggerated hidden bullish divergence. All that was, I mean, that's a little iffy because it may or may not be there given the exaggerated nature of it. Basically, if you're not aware of it already, if you're watching this video as somebody who's a newbie to trading, an exaggerated bullish or exaggerated bearish divergence is basically like a watered down bullish or bearish divergence. It's just a divergence that's not as strong as when somebody will use the terminology of bullish divergence or bearish divergence. So if you hear exaggerated in front of bearish or bullish divergence, it basically just means it's a watered down divergence. And then lastly here for the altcoins, like I said, I'm going to go over the Bitcoin dominance briefly to summarize and end this video. But Dogecoin here for the last one, and the only meme coin that I take seriously because it just has so much price history, and it's in a, going all the way back to basically beginning of 2014. It's been in a 10 plus year long macro uptrend and has had from the absolute bottom here all the way to the recent all-time high of 2021, what has overall been 857%, and not 857, 857,000, big difference there. Almost 1,000,000% in gains. And if it, even if it just goes to $1 this time around, Dogecoin to $1, it's almost a psychological necessity at this point for Dogecoin to go to $1. It would be, if it does that, it would have been all-time, historically speaking, Dogecoin would have solidified a all-time 1,000,000+% gains from the all-time below of many fractions underneath the penny. A lot of zeros there, going all the way back to May of 2015. So we have the origin cross here. Again, I'm having to extrapolate back in the past a bit because there was a bearish dominance, so I'm assuming this. So we have 0, we have 1, 2, 1 would have been somewhere in November 2014. Ultimately, you would have been buying during the accumulation zone here. You would have had to tough it out through some downside from roughly, what is that? Like, I'm not even going to try to do that fraction in my head. 0.0002 all the way down to 0.00009. You would have had to tough out that downside. But ultimately, like I said, you're buying during the accumulation zone. You're doing what you should be doing as a trader, especially if you take a long-term position trading scheme of buying the accumulation zones and then waiting for the bull markets to ensue. So we have 1, 2, 3 here happens after the accumulation period, after Bitcoin is absolutely bottomed out during this bear market of 2015 in May, bottomed out here. Third cross, again, very good time to buy. Again, we're reaching that third to fifth cross, which is the prime time to be buying. So we have 4, 5. The fifth prime cross happened in December of 2015, somewhere around Dogecoin being roughly 0.0013. Honestly, I shouldn't even be saying the prices at this point because they're just so low. Anyways, so we have our cross here leading into 6 and then 7 here in June of 2016. Fantastic opportunity to buy. Clearly you can see that it hadn't gone parabolic yet. And then we have the 9th being an odd cross here because it's not a prime number in March of 2017. Had you anticipated this, because there was a bullish divergence here, the ASO was building upwards and the price was going downwards, you would have anticipated this and bought somewhere, again, I'm not even going to try to say that value, it doesn't matter, somewhere within February 2017, which then led all the way into January 2018 when it hit almost 2 cents, basically 2 cents. So that, again, would have been a fantastic buy-in. So here we're going to then lead into the 11th cross here, this being a prime cross in November 2017. Could have anticipated this because there was a hidden bullish divergence. The ASO from October 2016 to October 2017 was going downwards, whereas the price was going upwards, so there was a hidden bullish divergence there. Again, another good buy-in. So we're going to rinse and repeat here with the beginning of the bear market of 2018 in February. A few weeks into that bear market, we have 0, 1, 1 again. Ultimately, it would have been, in the bigger picture, a good buy-in because you're buying in during the accumulation period. And had you caught the low here, you basically would have been buying the bear market low, which is just roughly approximately around 1/5 of a penny here, and around August of 2018. So here 1 would have been a good but not super notable. Now 2, then 3 again here. We're entering that 3rd to 5th prime cross. And had you anticipated this, because there, again, there's a very minute and rough bullish divergence here, so you could have bought the low somewhere at approximately 2 cents, basically buying the absolute bear market low. It did go a little bit lower in March of 2020, going all the way down with a wick to roughly 1/10 of a penny. It was basically like 1/10 and a half of a penny. So that would have been a good cross to buy again. So there we are seeing the 3rd cross. 4, 5 happens here in May of 2020. This is after the March crash. So again, fantastic time to be buying in it. You also could have anticipated it because there was a double bullish divergence here from September 2019 all the way to April 2020, where the price was making a bottom here, 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 where the ASO was going up from here to here to here. And if had you anticipated this, you could have bought the absolute wick low for this bear market, and you would have been able to catch a move. Like I said, just approximately 1/5 of a penny all the way up to 75 cents. You would have in total had a roughly 54,000% profit there for what you, however much you actually bought in. So going forward there, again, that being the 5th, so we have 6 and then we have 7 here in December 2020. Had you anticipated this, because you should have, because there was a hidden bullish divergence from April 2020 to November of 2020, where the ASOs are going down and the price is going up in terms of the slope of the support there. Again, fantastic buy-in. Again, we're going to rinse and repeat. We have July of 2021 here. Go forward, we have 1. 1 would have been a good buy-in here. You would have been buying during the accumulation period, anywhere from around roughly 6 cents to around 12 cents. We have 3 here sometime around January of 2023. Again, basically would have been buying during the same price range. Accumulation zone, again, I can't strain that enough. The accumulation zone is very important, especially in comparison with the ASO. So we have 3 here, then we can go forward 4, then 5 here. 5th prime cross in November 2023. Again, this is going to be catching the beginning of the actual cryptocurrency, the broad cryptocurrency bull market. This is when Bitcoin began its bull market. This is when its first impulse began from 15 to 30K. You would have been able to catch Dogecoin for around 6 cents all the way up to 22 cents. And if you continued to hold it, you would now be from 6 cents to almost 50 cents. That would have so far be around 700 to 800% in profit. So here we have 7, we have 8, we have 9, we have our odd cross here. Again, should have anticipated. There was a bullish divergence here with the ASO building upwards and the price going down. And you would have been able to, again, catch another buy-in from around 10 cents all the way up to 50 cents. So that wraps up the ASO and all the altcoins I wanted to go over. As I said, I just want to quickly touch on the but the Bitcoin dominance here. As I pointed out recently, you have this historical uptrend here on the RSI. If you go back to the prior iteration of the bear to bull market, we see here ascending for the RSI uptrend. It breaks it. Alt season really begins as Bitcoin dominance really starts to die out. Again, we're seeing our current iteration of bear to bull. Again, ascending RSI. It's been broken recently around mid-November. If you look here specifically at the price, it has come down from around 62% all the way down around 55%. So far it's finding a bounce and it might go higher. It might test roughly 60% again, but I do ultimately think, let's say it does something like this and goes all the way back up to 62% and sets some sort of a double top and ultimately end up coming back down. It doesn't really matter because this has already been indicated that alt season's definitely here and we're at the earliest moments of it and we're getting very close. It could be literally just a week or a few weeks or maybe a month or 2 away that we're going to start seeing these altcoins go absolutely buck wild, and that will start to show itself more and more as the dominance here continues to go lower and lower towards this, where this purple horizontal trend is at 50%. As the Bitcoin dominance gets closer and closer to 50%, that means that we're going to start to have a flippening occur, in the sense that the flippening here denotes where the dominance of Bitcoin is below 50%, meaning that the altcoins are gaining a bullish market capitalization advantage against Bitcoin, meaning that Bitcoin is already topped out and it's already beginning its bear market and it's already losing value, but the altcoins are still going up because they are in a hysteresis rate lagging behind Bitcoin because Bitcoin is the prime mover. But again, as I said, that's all that I wanted to go over in this video. As always, none of this is meant to be financial advice. Rather, my channel and these videos are meant to primarily be educational in order for people that are new to trading, in order to get used to the way a chart looks, to pick up on certain trading and technical jargon that I use, like when I explained divergences and exaggerated divergences earlier on. And like I said, the topic of this video is a specific indicator that, and as I wrap this up to summarize, I just got done showing the ASO using Bitcoin, moving into Ethereum and Cardano, going over the big 3. You could say, if you will, the trinity or the triad of the cryptocurrency space, the big 3, leading into a bunch of altcoins, some prominent, some a little bit more obscure, even in meme coin, Dogecoin. And I consistently showed that the ASO, not only what it has shown on Bitcoin for the last approximately 15 years with these prime crosses, obviously with the exception of 9 or any other odd numbers. Like XRP went out to like 13. Obviously, not all odd numbers are prime numbers. Anyways, that's besides the point. But the point is, again, this ASO is showing the exact same patterning and the exact same indication for cryptocurrencies across the board. And like I said, I think I'm leaning to this being in my personal top 3 most powerful indicators that you can use in order to solidify position trades within accumulation zones leading into full-on parabolic, full throttle bull markets. But nonetheless, everything said, everything gone over. As always, I hope you enjoyed, and I hope you all have a wonderful day.